this is John Piper with the weekend video clip, and it's Saturday the 20th of September, and we're starting here with the chart of the Dow. This is the daily chart, and you can see that we had this decline, a strong rally up to same resistance, then this corrective move I was talking about, and then finally we got this breakout which I was also talking about. Let's have a look at that in a bit more detail. In the event, the Monday was actually fairly quiet, and Tuesday ended up opening below 17,000, but then we got a stronger move up there, and then of course we got the opening up higher yesterday on Friday on the referendum news, if nothing else. So let's just see if we can count the waves here. Right, count this as the low obviously, so you had a 1, 2, 3, 4, 5, then a sort of ABC, a bit lackadaisical, but no, that's 1 and 2. 1, 2, 3, 4, 5, so you've got a fourth wave here. This is a final fifth. 1, 2, 3, 4, 5. Alternatively, it could have been that this is a 3 and this is a 4 here. However, I think it's likely to see a bit more downside, so it's possibly we have seen the complete 5. So just to summarise that, 1, 2, 3, 4, and then 5 to there looks like the best count. This being a fifth wave. Now we've got an A, B. So some early weakness next week would be quite likely. The big question mark actually is whether or not this is all we're going to get. Now, have we seen the move? Is this the move? I think on a final fifth wave, in which case this could be impulsive. Alternatively, this could be a corrective move, and we're going to go higher. And if we did that, it would be a very strong move up. So we're right now at a pretty important crossroads, where either way, we could be seeing very fast action coming in next week, either because this is a final fifth and we're going to go down now, or because it's not a final fifth, it's a wave 1 and this is a wave 2, and then we've got a wave 3 coming in. So it should be a fairly critical week next week. I'll be looking out for signs that we're going to go down from here. Looking at the very short term minute chart, if we take the peak there, just above 17,350, there is a 1, 2, 3, 4, 5 count with an A, B, C of sorts, and this can be the start of the next one. So the Dow is going to be quite critical. Those of you who want to trade this, you could look for an extreme stop below 17,260 with a stop above 17,320. That's about 50-60 points. Aggressive traders may want to trade some kind of shorting opportunity. If we start to go down first thing, that's another way of doing it. Tunnels could be good actually. You could place some kind of tunnel bet if you get the right prices, of course. Is a problem. I haven't actually used longer term tunnels with what's used to be called Bello Markets. I think it's now binary.com. So I'm not quite sure how the pricing works. IG I think only do daily tunnels. You might want to go for a longer term tunnel in this kind of situation, because we should get fast action in either direction, either up or down, which of course will suit a longer term tunnel bet. You need to have you want to bet that the range is broken at some point. You can see volatile action. You can also play the VIX, I guess. The VIX has been languishing. I've been holding a very small VIX position. I might well add to that during the coming weeks. Look at the DAX, got a similar kind of position. Big decline, rally back up again. Possible fifth wave here. Let's have a look at that in a bit more similar detail to. Okay, we can see from the low here. Got a 1 there, 2, 3, 4, then an elongated fifth wave. So again, this could be an important decline. It's either a correction, in which case it still has further to go, I think, with, again, as per the Dow, a move up, or it could be that we're seeing some kind of major peak here. Not impossible in the circumstances. I mean gold is languishing. Apparently the amount of money in ETFs in gold now is an all-time low. So that's a sort of signal that gold is probably due to go up. I mean, how can it get even less popular than at the moment, as it were? I mean, obviously the price can go down a lot from where it is. It's still above 1,000, which a few years ago would have been seen as a huge increase. Anyway, there's a few factors to bear in mind here. One of these is that this very rapid move only lasted. A lot of it was in gaps. Quite a big gap there, bit of a gap there, and of course you notice none of these gaps closed. It wasn't a great week for crowd gap last week because of this, and you get this kind of very fast action. It can just blow away the kind of technicals that a system like crowd gap relies upon. So there was evidence for blow off there. It was of course expiry on Friday. We had the referendum. But I think the referendum is perhaps less important to DAX and Dow than it might be to FTSE. I think it's probably more about traders wanting to push some prices up for whatever reason, perhaps get the last hit the last short stops maybe, with a view to the market then coming down. So there's a concern that we're going to see the market fall back from here. It's not impossible peaks are in. We've got obviously the October expiry coming up, which is traditionally when there is a bad move, the October expiry is often extremely pivotal. Certainly it wasn't, well, quite a few times. 87 of course sticks in my mind as it was the first year I started trading. Anyway, an important month coming forward, I think. FTSE, relatively subdued on FTSE. We had this correction I've been talking about last week. I remember talking about the way that we got these continuing lower prices, but they wouldn't follow through, suggesting we're going to go up. The rally actually looked less complete on FTSE. Let's go down a scale. So this could be a 1, could be a 2, we've got a 1, 2, 3, and you could say that's a 4, I suppose, a bit truncated, 5. So it counts better as a correction on FTSE, but with slightly different parameters, and I would say DAX and Dow would probably take precedence. In fact, all three markets, if we're seeing these declines, it should be clear come the middle of next week whether they are corrective or whether we're actually seeing something more important. And also I'll be reporting on that as we go forwards. Gold. Well, gold's just broken through as we've discussed, but taken out that low. So we need to see a bottom really. I mean, obviously the key levels around here, down below 1200, which we're quite close to now. I think perhaps a break's quite likely. See what happens once we get to that point. Right, finally look at pound dollar. We've had this decline, had this bounce back. 38.2% levels have been relevant here. As I said, I was buying euros and dollars yesterday. I haven't taken a trade as yet, but I think we're quite close to wanting to do that. Let's have a look at this in a bit more detail. Again, we have a clear A, B, then a C. So I was waiting for as per my reports. This looks like wave 1 of the initial leg down. Again, a bit more details required. This is a 10-minute chart. So we've got a 1, 2, 3, 4, 5, and then let me just recount that. So yes, this is the 1 here, I think, 2, and then we've got a 1, 2, 3, 4, 5. Then I've got a 4 thing here, and then kind of diddly 5th into the close. Suggestion is that we should perhaps see some kind of rally. So I think it's right. We want to be short pound dollar. Stop needs to be above here, which is 1.654 thereabouts. So it's quite a big stop at the moment, 2 cents plus. It's been quite volatile, and if we blip up from here, maybe retest 164. That might be a good point to get in. See how it develops. And obviously, you can either simply sell the rally, or you can wait for a pullback and then sell that pullback from the rally with a stop above the recent high, whatever. Anyway, we'll look at that as we go forwards also. That's all for today. Hope you found it interesting and useful. Be back with the report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.